Bitcoin, everyone getting super excited today about Bitcoin as it's breaking up over this level. It made a new high, new 52-week high on the charts. But the negative here is this, right? Is that we've seen pierces of this line multiple times. In fact, I want to go over and zoom in, right? So, I mean, if we just look at this, we have here pierce, here pierce, here pierce, here pierce, and today pierce. So this isn't abnormal, and it's very early in the day. And so while I agree, I do still favor a breakout on Bitcoin, you have to say that we need to see where it is per the close, right? And then also over the weekend, volume gets lighter, and I don't necessarily trust it. But ultimately, where does today's candle close? Because look, it was all the way up here, and now it's all the way back down here, right? We're only about $300 over this 38,000 level. So we need to see a daily close with that confirms the next day or so, and then we can talk about further upside. Now, some of you guys have been asking about, well, where is your max upside on Bitcoin? All right, now, ultimately, I still think, by the way, and I've said this before, people have been like, oh, well, what about 15,000 again, or 12 or 10,000? Remember, there's one case where Bitcoin goes to 15 to 12 to 10. The only case that happens, in my mind, is if the stock market collapses 50 to 60%. Like, basically, if we get in a scenario where we see a 2008, 2009 scenario where you have a massive run for safety, where there's a massive collapse, let's say we have inflation staying high, the economy starts to crater, the Fed can't lower rates enough because inflation is still high or whatever it may be, that would be a scenario where Bitcoin could still head down to 15, 12, or 10. Other than that, I don't see it anymore. I really do not. Okay, but let's talk about upside. Where could Bitcoin go on the upside? To do this, check this out. We're going to zoom out on the chart. In fact, let's even go to the weekly chart. All right, so if we go to the weekly chart here, there's a couple lines of confluence in the chart that I do think are worth paying attention to. So basically what I did was I took this high going back, I believe this is the 2019 high here, right? If we connect that high through the lows of the bull market here, through the lows of this pullback, and that line is extended out, you get a pivot point here. That pivot point also coincides with this high, which is right at that same level. To throw even more confluence on it, and again, the more confluence or factors you get, the bigger the level is. What I want to show you guys is a Fibonacci retrace. If we take Fibonacci, right, and we bring it to the highest point, we're going to do a Fibonacci retrace here. If we drag it down to the lows, right, look at this. And this, again, folks, hopefully you guys can see this. But basically, this is your 618 right here. And look at the line. It aligns perfectly with that point that I was just talking about on the charts. Okay, so again, you have two trend lines and a Fibonacci retrace, the 618 Fibonacci retrace. They basically coincide at 48 to 49,000. We'll call it even 50,000. So for me, that's your best bull case if the approval of the spot goes through, if you continue to see the stock market hold up, if it's risk on, if more money printing comes in the next 6 months or so, you could see 48 to 50,000.
Hey, crypto legends, welcome back to another thrilling episode of Crypto Street. I'm your crypto buddy, and today we've got a roller coaster of crypto stories that will have you on the edge of your seat. Listen up, crypto investors. The FOMC chair dropped some beats that echoed across the crypto realm. After Jerome Powell's speech, Bitcoin and altcoins took center stage. The core inflation rate is grooving at 2.5%, and rumors are swirling about a pause in interest rate hikes. Cue the excitement. Bitcoin's social dominance skyrocketed to over 24%, stealing the show. Ethereum joined the jam, but Bitcoin was the headliner. Is a drop in interest rates the secret sauce for a crypto fiesta? Keep those eyes peeled for the FOMC's December rendezvous. Hold on tight, crypto thrill seekers. Bitcoin threw a bash, soaring to $40,000 like it's the hottest club in town. But here's the kicker. Over $100 million in liquidations happened. Short positions took a hit, and altcoins like Chainlink, Runi, and Meyear joined the party. Ethereum strutted above $2,100, adding 3% to its swagger. The crypto dance floor is wild, and over-leveraged traders got a reality check. It's a reminder in a crypto club. Expect the unexpected. Get ready for the blockbuster, Crypto Dreamers. Bank of America spilled the tea on 2024, hinting at interest rate cuts and Bitcoin's halving. Bitcoin flirted with $40,000 this week, and whispers of an ETF approval fuel the rally. Bank of America predicts rate cuts, aligning with UBIS's forecast. Bitcoin's halving in April 2024 is the plot twist, creating a supply shock. Hold on tight. Glassnode predicts a $70 billion institutional demand surge post-ETF approval. Will 2024 be the year Bitcoin hits the stratosphere? Get your tickets now. Attention, crypto investors. Rick Edelman, founder of Edelman Financial Services, spilled the beans on financial advisors' waiting game. Spot Bitcoin ETFs are the golden ticket, with 77% of advisors eagerly awaiting their arrival. Imagine ETFs for blockchain and digital assets. It's a game changer. Edelman highlights that 47% of advisors personally own Bitcoin. The big question, when clients ask, should I buy Bitcoin? Will advisors say, oh yeah, I've owned it for years? The ETF saga continues and the excitement is palpable. And there you have it, Crypto Legends, another adrenaline-pumping episode of Which Crypto Storyline Got You Buzzing? Now let's continue our enlightening discussion with Gareth Soloway.
Yesterday, I said, was a very pivotal day. The prior day, it doesn't look big here, but we had seen a big reversal candle. The chart here on the SPY, or the S&P 500, had opened on Wednesday, right? It had opened above this key resistance area right here, and it had closed back below. Now, when you think about a technical indicator or a chart pattern, that is very important, especially after such a huge move to the upside. In other words, to simplify it, we had a huge move up. The markets opened above resistance, thinking they could break out, and instead it was pummeled to the downside. And by the end of the day, we had a reversal day closing back below resistance. Now, this is the kicker. Yesterday, so that was on Wednesday. Coming into Thursday yesterday, we talked about how you needed to see follow through for the bears to continue. So the bulls were in charge all the way up here, even with the gap up, and then the bears took control on Wednesday with the reversal day. Now the kicker is this, right? It's like a soap opera. What we saw yesterday was initially great selling. The tech stocks were getting pounded. The bulls were running for the hills, and the bears were in control. But then, late in the day, and this is like, this is like some suspense thriller when you're coming to the charts. Late in the day, we saw this massive buy program come into the S&P 500. I'm going to flip over here, guys. Take a look. This is the 10-minute chart of the S&P 500, and look at what happened. So S&P was down all day, down, little bit of a bounce, retraced, and then boom, to the upside. And amazingly, the bulls were able to wrestle control away to back into control of the markets. Now, again, yes, technology was still down. We certainly are seeing some rotation in capital, but ultimately, this rally here puts it back into the court of the bulls being in control of the S&P and the NASDAQ versus the bears. Now, I did just tell my traders out there on the trading floor that there is one scenario where the bears could come back today and wrestle control back going into next week. To do that, what needs to happen? If we flip back to this chart, we would have to have a close on the S&P 500 back at yesterday's low or below. Okay, so again, if you're looking for how to view the market on a technical basis going into next week, being today's Friday, look for that. If we close down a little bit but not at the lows, bulls still have control. If we close at the lows from yesterday, essentially negating that entire late day rally, then you talk about now the bears maybe are coming back in and taking control. All right, so I really wanted to cover that because these are the little things as a technical trader that honestly are unbelievably important to view. You have to know who's in control. Which angle is the prominent angle to the market? Is it further upside or is it downside now? Markets are extended. No one's arguing that. But again, doesn't mean markets pull back when they're extended. I've seen markets go much, much further to the upside than this even. But again, the bulls are kind of trying to maintain control. The bears are trying to fight back and get control. Quickly going over gold, not much new to report here. Gold remains relatively strong. We're just consolidating here. Remember, consolidation makes a healthy market. So again, when you have a move up on gold like we've seen, right? So look at this. Big move up, needed to consolidate. That's healthy. It allows for the next move up. Now you need to consolidate again before reattacking the all-time highs on gold. So I do think gold, again, by year end, I really do think it attacks the all-time highs. Whether it breaks through or not by year end, I don't know, but ultimately I do think that happens.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.